Hi, I'm Robert Crayford, Fund Manager on CQS Resources, along with Keith Watson. Keith and I have been managing CQS Natural Resources since late 2015, along with Franco, who monitors the credit positions. That is a smaller proportion of the fund versus where it has been historically. CQS Natural Resources is a 180 million sterling fund with a 2.6% dividend yield. It has a fairly diverse split across both commodities and regions, giving UK investors exposure to that global commodity sector. So within that we have around 30% of the fund in energy, we have around 20% in precious metals and around 20% in base metals. And we generally prefer regions where we see less political risk. So within that you can see the fund currently is around 40% weighted towards North America and roughly around 20% weighted towards Australia and 20% towards Latin America.
We look for specific situations. We are very flexible. We could be focusing at one point in a cycle on a company which is developing a specific asset, maybe unfunded. We would expect to get those type of situations on very, very attractive valuations, as opposed to those in production which have less execution risk and therefore a slightly different reward profile.
And one of the aspects that's really at the core of our investment process is that we have hundreds of meetings a year across different sectors, across different regions, and that really helps us build up our global picture, our better understanding of flows, and really helps us hone in on the best value opportunities. So one of the big benefits for us as being part of CQS is that we get to really leverage off the internal infrastructure, the systems, compliance teams. But over and above that, we also get a real enhanced access to both the big sell-side shops as well as other leading commentators in many important areas. One of the key themes in the fund is the energy transition, both directly and indirectly. So directly you can see that through its weighting in the likes of lithium and nickel, which directly feed through into batteries, where we've seen material price inflation given the strong growth in EV demand, but also in some of the old economy as well. Part of this energy transition has led to less investment in much of the old economy, and what we're now seeing is a degree of revenge of that old economy.
By virtue of being one of the few closed-end trusts that remain, particularly in the UK, I'd say that we also have an advantage in that a lot of management teams actually like to or welcome the opportunity to see us across a number of different sectors, and that gives us a good feel for the markets, a good feel for operational performances of any particular investment that we like, and I think it gives us a good ability to screen out assets that in many cases have changed names or changed ownership historically, and which we've seen several times. We would also have very much a focus on valuation, something which the closed-end structure of our investment trusts lends itself to. We are not constrained by liquidity. The less liquid investments that we search for globally typically have a discount versus the larger cap names that most UK investors would typically find on their radar.